What is going on, traders? Welcome back to the Traveling Trader. In this video, we will be talking about NIO, what to expect coming up from NIO's earnings this week, and why, in my view, NIO still has huge upside. We'll look at a bunch of different catalysts and potential factors, which lead me to the conclusion that you should still be dollar cost averaging on NIO. You should still be buying the dips on NIO. So check out my analysis here. You do not want to miss it. NIO's upside could be absolutely huge from here. And if you guys are a fan of this channel, you know that this is not a moon party channel at all. I aim to provide you with the most objective analysis based on the information that we know thus far. So if you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know what you think of NIO, how you're trading it ahead of earnings and beyond. I already know I'm gonna get a bunch of comments that say just buy NIO, but yeah, give me a little bit more than that. And if you want access to all of my alerts, link is in the description below, where we are also doing the 10K challenge. Our portfolio has recovered very nicely this week due to a number of changes that we made. So to track it in real time, and for all of the other options and stock plays, sign up link is in the description. Let's get right into it. So what is it that I like about NIO? Well, really the question should be framed, what is it that I don't like about NIO? It's harder to find things that are negative than positive about the stock right now. So let's start where I start everything with the chart, and then I'll get into my earnings plays towards the end of the video, so don't miss that. But currently, NIO has been bouncing off of the 200-day moving average, which is the green line on my chart. This is very important because this tells us that the market is willing to support it at this level time and time again, going all the way back to the beginning of March after it dropped from a $67 high. This is actually the longest period that NIO has spent at a support level, going all the way back to the pandemic crash of 2020 around the March-April timeframe. We already know that NIO's deliveries of 20,060 vehicles already beat its Q1 outlook, which is what this earnings report is going to be based on coming up this week. Now, based on its Q4 outperformance last year, which was the pandemic year, if we apply that projection to this year, the NIO will be on track to grow revenues by 124% in 2021. This year, it recently finalized a deal with Sinopec to build 5,000 battery swap stations, so it is integrating itself within Chinese society, using its battery swap technology as the backbone of this. Now, one thing that's a continuing story that we have to monitor is how the chip shortage could affect NIO as well as other EV manufacturers. I think that is a big unknown, but I also think that the world of semiconductors will come together to eventually solve this chip shortage problem. There is just too much demand in the space for that not to be the case. The time frame of when that will happen is a big unknown though. Now, in terms of its valuation ratios, if we look at NIO's price to sales ratio, it's trading at around 20. For perspective, Tesla is trading at around 22, so it's not that far off. However, in terms of growth potential, NIO currently is experiencing a much higher rate of growth, which is natural. It's not to say that NIO is better than Tesla. Calm down, moon boys. I'm saying that because NIO is in its infancy, there is a lot more upside. And this is actually substantiated by the numbers. If you look at its revenue growth year on year, NIO is at 107%, while Tesla is at 28% because it is way more established than NIO is currently. Now, we all know about NIO's deep penetration in the institutional investment world, meaning that a large number of institutions hold a large number of NIO shares. Here are the top ones, for instance. Baillie Gifford has 107 million shares of NIO, almost 108 million. BlackRock, almost 62 million. Vanguard has 40 million, and so on and so forth. But if you look at the recent purchases, so as of April 1st, you'll see that NIO has been entered into a lot of ETFs as well. Some of these are big ETFs that are hosted by Vanguard. So 15 million shares in the Vanguard Total International Stock Index Fund, almost 15 million shares in the Emerging Market Stock Index Fund, so on and so forth. These are recent purchases. So this ties back into what I was saying about this support level for NIO being an important one, not only by retail traders like us, but seemingly by institutional investors as well, which is part of the reason why it's been propped up here. All right, and if we take a look at its price upgrades, here I'm on FinViz, you could see a nice breakdown of all of the price upgrades initiated since January. You have Jefferies, Nomura, Morgan Stanley, Mizuho, and CLSA. The last few price recommendations have all been upgrades, buys, or overweights. These have varying price targets ranging from $50 to $80. All of those ranges are higher than what NIO is currently trading at, which is at around $41. Now, in our private trading group, I said that buying NIO off the 200-day moving average made a lot of sense, and that this is an area where I would load up heavily on NIO if I didn't own some already. For all of you new traders, that does not mean that NIO cannot fall below the 200-day moving average. Of course it can. Anything is possible in the market. But it simply means that this is an optimal buy point, and it is represented by what the market is telling you according to the chart. Trying to find the absolute bottom and sell at the absolute top is an exercise in futility. You need to remove that from your mind. That is not the goal. Although that is very nice when it eventually happens every once in a blue moon, that is not the goal. So I don't care if this is the bottom for NIO or not, or any other stock for that matter. If I have a high conviction on a stock and I recognize that this is an optimal level, I don't mind buying there and then having to average if it does drop down a bit more. Much better than FOMOing at the high and NIO dropping from that $67 mark, not knowing when it will get back there again. And in the 10K portfolio, NIO represents just under 5% of the overall portfolio at the moment. All right, so one more thing that I want to draw your attention to, and then we'll talk about NIO trades for the earnings coming up. I want you to take a look at NIO's options data, and I'm using Market Chameleon here, by the way. This is a paid service. It costs me $100 a month. In my view, well worth it if you are interested in it, where you'll get a snapshot of all of the options data. I do have a link in the description, but otherwise you can find this information for free if you keep digging around. It's just not presented as nicely as it is here. Looking at the options data, you'll see that almost every expiration coming up in the short term, how many calls have been open on NIO compared to the puts. You can see that April 30th, which is the week ending as of the recording of this video. You can look at May 7th. If we look at May 21st, which is a monthly option, you'll see 10,000 new open interest contracts. Most of them are in the calls. So the market is really bullish on NIO going forward. So how am I going to be playing this? Well, if you take a look at what I did in my last video, what I talked about with Tesla, I said that I was going to be trading an Iron Condor on Tesla. An Iron Condor is a neutral option strategy where you find a range and you want the stock to finish anywhere in that range. And if it finishes in that range by expiration, you keep 100% of the money that you sold that Iron Condor for. As a matter of fact, speaking of that Iron Condor, we closed that today for 57%. Did not even wait until the end of the week because we were up so heavily with 3 days to go. So we did not want to expose this position to any more market risk. In terms of other plays, we had a TME cash secured put. We closed for 52% profit. The Apple diagonal spread, which we opened yesterday, is up 21%. We closed the Riot spread for 45%, the DraftKings spread for 50%, NNDM calls, which NNDM at market open went absolutely nuts, closed it for 60%, and we are still heavily down on the Mara calls. But if you want access to all of my trades, including these, link is in the description below. I also do a live stream now on the Discord a few times a week where I will do real-time calls as well. But anyway, back to NIO. The Iron Condor is the strategy that I'm looking to employ here. I don't think NIO will blast off on earnings because, as I said with Tesla, and a few people argued with me in the YouTube comments, the information is already mostly known. So unless NIO announces something that is extraordinarily surprising and positive, I don't think NIO will blast off during earnings. However, a week or 2 weeks after earnings, we could start to see a rally as long as the market itself is not crashing, which I don't think it'll crash. I do think we might see a pullback after this huge earnings season, but I don't think we will see a crash. So in this case, I do like an Iron Condor here. I'm probably looking at I will be looking at maybe the 45, 46 level for the calls and maybe the 35, 34 level for the puts. So right here, you see that I opened up the 45, 46 vertical for the calls, the 37, 36 vertical for the puts, expiring May 7th. I'm getting $40 for selling this Iron Condor. My max loss is $60, but the main gist of this is I need NIO to finish between $37 and $45 by expiration. And if it finishes anywhere in between, then I get to keep that entire $40 per contract that I sold this Iron Condor for. I really like it because it's a defined risk strategy, and you can create a wide range on potentially volatile stocks. I will never lose more than $60 on this trade, and I will never make more than $40 on this trade, so all the terms are known ahead of time. This is likely how I'm going to be playing NIO. If options are confusing you and you really have wanted to learn options, I recently did an options course where I go over options from A to Z, starting with what is an option and ending with some of these complex strategies like iron condors, verticals, diagonals, etc. Check out the options course. There is a link in the description for $100 off that is good until May 1st. So if you are interested, you definitely want to check it out within the next few days. If not, I appreciate your viewership nonetheless, and you can find this information for free if you do your own digging. Anyway, traders, that is it for this video. If you got anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know how you're trading NIO before earnings and what you think of some of the information that I presented here. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.